Welcome to the channel, Trader Jan speaking. This video is about live trades on the 17th of April. We are now at 5:42:43 of the Chicago time, and the market just did a little retracement here from if you look at the top right here, 50 minutes chart, that was rejection at the old market high, or at the all-time high from yesterday. And as we can see, this high volume area here, this was the rejection area. So we got to be very careful. Here I see two scenarios. One is we had this green area here, which is coming from my market footprints indicator. It was a huge volume here at around 4:30, and this one is the area of the that's the value area of that candle at this green area here. And the market has now two options. One is going further down. There is an area here as well, a lot of high volume here in that area, which is a potential area of rejection as well. So I'm gonna mark that area here. It is configured in a way that it stops drawing to the right when it's crossed, but you can see here it has been crossed, retested, and then the market went up there. It would have been a nice 100-tick trade. Now I'm gonna mark that one separately, and what do I have here? I have the intraday location for that one. So the market might go back to this level here, or to that old high when the market was starting, or it might even go back down here where we had like huge volume in the morning at 1:30 before the European session. And the market might as well test this area again. It got tested quite well here. And so once the market shows me that it changes direction, like it's going long with one positive candle, with working with the 200D chart here, so it needs to have 200 plus 200 delta. You see here the market buyers are coming in and they're pushing the price up. As you can see here, it's actually that's my liquidity battle indicator. So now the market sell orders coming, but as you could see, they were not able to push the market down. So there were limit buy orders which were holding that. So here see again it pushes down, but the price doesn't really flinch. So there's an interesting sign of the market indeed pushing, returning here at that level. I'm gonna see, if you look at the delta here, it's like right in the middle, it went to negative. And now it's kind of in the middle on the way up, maybe, hopefully. But we can see that here on that candle as well. That's a delta candle, D4 delta. So it is, delta was down here, but now on the way. Still negative here because market sellers are coming in. Still negative, but the market doesn't really move downwards, which is great. I want to see that one shifting from market sell to market buy like it is now, and the market buyer is actually pushing the price up. I'm making myself ready to get into the market when the candle is actually closing. Currently there's a lot of push. That's good. What I actually prefer to see is when the limit sell orders coming from the top here and the market buy orders, they're lifting the offer and the market is going up now. Nice to see here there's volume on the top. That's great. So volume is shifting within that candle at least. So if that one keeps going and this one here goes to 200, then I'm pretty confident. But it really depends a little on how that number goes to 200. If it's like scratching at the bottom a mile, sometimes up, sometimes down. If it has a hard time to go up there, I'm not extremely convinced. If it's getting 200 like before such a barrier, then kind of not too confident as well. So it really depends a little on the situation. At the moment, the limit buy orders, they are feeding the market sell orders here. They're attracting the sellers actually to go further down. But as long as market pushes past the barrier here, that's area of high interest, and there are buyers and sellers occupying that area. So it's the colors are coming from the delta. So if there's a delta up here, like green lines up here, that means that's the limit sell orders holding the market buy orders, and that's not something we want to see up here if we want to trade long. I want to see it here when we want to trade long. So here the market sell orders couldn't push the price down, and even exhaustion, the volume declined here. So I still wait for the closure of the candle. I don't want to be too over optimistic. And still I have the upper deviation of the VWAP here. So it is coming close, past that level. I'm actually getting super ready. 175, 180, it goes up and up.
Order filled.
And I'm in. So this is my stop loss here, minus 100s. No, I don't want a pyramid. I want to have a simple view here, 200 ticks plus 100 tick stop loss. Now the sellers are coming in, not my favorites, even though they have been holding back here. But selling is pushing in. So that's going to be interesting now. My first bet would be 41 ticks here until that upper deviation. The upper deviation coincidentally goes in line with this area here. So there's a low volume area up here where the market was being pushed down. Our account statistics indicator, or that were the profits points from yesterday. No, we don't want to count them. Account statistics, we only want to see today's day. So 1 tick and a plus. Okay. Actually, for the starting of the day, I tend to set the, even though it's
Order cancelled.
It's a really bad risk-reward ratio of 0.4, but market sellers are being a bit too pushy here for me. Even though the limit buyers, they are taking all the pain to keep the price high. And you see here, those are the absorption bars. If market sellers go increase, and those increase as well, that means a lot of absorption going on. But what I want to see is this long limit sell here. So there are sellers coming in on the top above the price, and those market buy orders I want to see increase. So, and preferably no absorption happening here. Since it's the first trade of the day, I might just be happy with the 40 ticks here. So I'll go and mute and let's see how it works out. That's actually the ideal situation here. We have limit sell orders and the market buy orders lifting the offer, and now a big push of market buy orders, and they're able to push the price up. That's what I want to see. Market buy orders being able to push the price up. That is my perfect picture of a Friday afternoon. Actually, what I'm gonna do is I'm gonna move the take profit here.
Order cancelled.
And what I'm gonna do is I'm gonna shift, since the buyers are coming in, sellers now as well, but I see it on the ES market is developing further up, having a little bit of a push, but it's halting right now. So once I hit the VWAP deviation here, I'm gonna go into break even. And rather than betting on the price increase, I'm gonna check what the market so let me check something here, because I'm not a big believer in magic numbers, but it's interesting to see if you have the Fibonacci numbers and the market moved from here, from the last bigger retracement to up here. And I didn't manipulate, I didn't put any numbers. and I didn't know it before, but here exactly at a 50% retracement, this sometimes happens. The market goes back for 50% and then it goes back up. So I try to play the patient game here. So if the markets if we start that one here or even here, then 50% would have been here. So the market would go further down. And to protect against that one, I guess we could go into break even already now. And try the second entry if the market really goes back here and then goes here. So let's check the market sellers for sure. They shall go away. So let's see what happens. So it has reached the VWAP and it's now kind of like undecided. Here it's the VWAP deviation here and there's like not really interest. Let's see if there's more volume. Volume is coming up. That is wonderful. Love it. So I'm gonna go
order cancelled.
Break even now. As I said, when the market reaches that point, then I would be more inclined up. So let's see what's happening. I want to see some buyers flying in, not sellers. Those are the moments when you think like, oh, I should have taken the profit here. And yeah. So that is good. Going above the deviation is now critical. Upper deviation 2 of the VWAP. Come on, my little friend. So my take profit gonna be here at
Order
the
cancelled.
border. 73 ticks. Sellers are coming in but not able to push the price down. That is good. That is what I want to see. I'm not sure if I'm patient enough to wait. There's a lot of volume involved. That's great. Good to see. There's no good volume involved in the push. It's a patience game. I guess I'm gonna go out here. Gonna save my 47 ticks.
Order cancelled.
Or 45. So that was the first trade of the day. 46 ticks in the plus. And the market is now retracing a little. I wanted to play it safe. And let's see what the market does in the upcoming time. One idea could be the market retraces back to this volume area from the day and tries to catch some energy down there and then go back up. I'm gonna take that one away and I'm gonna take that one away for the moment. We have this one here and that little friend has an alert and a repeat alert approximation filter, and it will notify us. Let's see. Yep, it does. So let's see what is up. I'll pause the recording and check when it's when my chart is talking to me. So coming back to the desk, here we see that trade could have taken up until maximum 59 ticks more. I would have taken it probably until, what did I say, either here 24 more ticks or here 40 more ticks. But anyhow, we have 46 ticks in the basket and the market is on the way to return now. Now we need to check what is actually happening when the market touches that high volume. Is similar like this one here. When it comes back, there was a high volume here and with a positive delta. This is the value area of that candle. This here is the value area of that candle, which was even more volume. So there is a reaction to be expected. But like here, I would only start a trade and a long trade if there is a positive candle showing me that the market goes further up. The market price action here clearly long. Here a little bit more of a correction, but as we've seen before, the correction was exactly at, what was that? That was a bigger, let me check, that was a bigger than 50%. Okay, so then I take this one here and that one here, so it was a 50% retracement, and then the market went back up. Now doing the same test here. I'm not religious about Fibonacci numbers, but the only number I care about actually is this 50% number here. So if the market goes back to 50%, I'm watching closely if that one is something which where the markets react. Now the market didn't touch that area, touched the candle, but the market didn't touch the area, so I would be very careful in going in with the next immediate trade. The market touched though this area here, and there are a lot of buying coming in. I feel a little bit of FOMO now, so better I stay out. Yeah, I better stay out. No, FOMO is not a good feeling for an entry of a trade. But here the market went down to that candle, to this here, and then it went back up. Now, if you look at the volume here, it's not a hell of a lot of volume up there. Downwards and upwards here is a bit more volume. So I'm wondering if that breakout is not a fake breakout. It is close to the new all-time high, the all-time high from yesterday. I'm wondering why I didn't mark that one as high. Let me check that one here. Indeed, I did not mark this area here as a high in my market preparation. That is not good. I'll go actually here from that here. That is 28 ticks long. So there's a thing in between, a low value area, low volume area. Sometimes the market touches only those and then doesn't go further. Anyhow, that was a good correction, and this one need to be global, so I see it. This one here is the all-time high. So this was just a trend continuation here, so I could easily have stayed in the trade here and just go with the flow. Would have been 120 ticks, but would have, can have, could have, doesn't help. Need to trade what the market gives us. I will not go into the market so short before the all-time high. It is 6:30 in the morning on Friday. Don't expect huge moves on Friday, even though there are Fridays which had huge moves, but I'm not extremely confident today. So I'm just gonna walk I'm in general, I'm long, yes, but I would expect a further retracement to the 50% level here into that high volume area here. So then I would consider an entry, but so far not. So I'm gonna switch on the recording again once the market shows its hand. So as we can see, the market run further higher. Imagine we would have left that entry running here until here would have been 285 ticks. But that's we need to not let it influence us. Now, before I enter any trade, I'm gonna wait until at least 50% retracement latest here, or even if I don't see any bullish candle, then I'm gonna go for retracement even until that level here. So it's 7:24 now. No major news to be expected today. So as often when the Americans come on board, when Americans markets opening in 1 hour, then the whole gain from the Asia session and the European session, often that one is being rebased, and then it's going into either direction. So I'm not doing a lot. I don't look at these ones here. Those are very low volume moves here. So it's going to be interesting to see how the market does over here. It's not a given that the market going to jump out now out of its skin and go higher, higher, higher. There's a likelihood, and it's pushing at the moment here. As you see, the market buyers are stepping in, and the limit sellers are there to take those. But there is a certain level of absorption. Look at these. Oh, yeah, that's a big jump. But considering that big jump of market buyers, it is a healthy move up. So this one was just a trend continuation. Little 100 ticks correction, and then the market just goes ballistic. So, yep, that's how it is sometimes. And you sit here as a trader and think, shouldn't I be in the market now? I'm gonna come back when I see a trade which fits to my personality. I did a new trade here. I forgot to switch on the microphone. It was a bit critical because it's short before the American Open, and that's the market is kind of unpredictable during that, at least for me. Now I saw a little bit of a shift in structure here, so I went into a short here when the market sliced down a little bit here, and then I went out here already. I most probably far too early because it was just a little trend following here, but it is short before the opening, so I didn't want it to jump back. It is nevertheless a trade of 77 ticks overall for the day, and I have 2 trades done today as 124 ticks in the plus. For my circumstance, already a good result. I'm happy with that one. So let's check out what the market opening brings, and then we see further. Quite well, that's quite likely that the market gonna retrace to the high of the Asia session here. Or this one here would be a retracement to the 50% level from the low of the day, and yeah, everything in between. Could go even higher further. The market went, if you look here, the market went a huge jump from the Asia high to 1,000, nearly 1,300 ticks up there. Wouldn't be surprised if there is a little consolidation or correction happening then. Now it's 8:25, a typical time when first big load is coming. And let's see, typically, those are the moments when you think, oh, I should have stayed longer and that would have been like 100 ticks more. But I want to be careful here. Was a high volume area here during the European session, and then sure the majority of the volume here down here. So the market might well go back to the source here where the big jump started, and then check it out if there's more to grab. And then you can buy as an institutional a buyer, you can buy cheap here and then buy it until the market kicks in again and drives the market open and to your profit. So we do the same. We are not quite the same. We just wait, and then when we see somebody's jumping in, we jump on the same boat. Okay, see you then. So we have it now 8:40. It's 10 minutes after the opening. It looks like that the opening range is kind of like this area here, and the market is currently within that area. I will not trade within that area, and even more, it's now around the POC. So I usually don't trade around the POC. Once the market goes a little bit outwards here, maybe jumping over that upper deviation, then I'm gonna go long. If it's gonna go outside that opening range, like down here, then I'm probably gonna go more short. But I'm a bit careful with short. I rather wait for a big retrace until I'm gonna go long in again. Having said that, looking at overall situation, it is always amazing. I put this Fibonacci retracement tool in here, PT maximum, where the market was. I did that one when I entered that trade here, and I put the bottom at the lowest part of the Asia session. So what's really surprises me always is at the 50% retracement, that is here the market turned. So there's one clearly short-term price action, and then the market turned and up here. So it's it's always easier to say the things afterwards, and afterwards all those things make sense. But it never stops amazing me how that works. So I'm gonna monitor the market further once I decide to go into a trade. For sure not speak now because it's right around the POC, and that's not an area where I want to trade. And having said that, I just saw a trade opportunity here. Not sure if it still would have worked out, but we are in a range here, and we came to the edge of that range around the POC, and the markets had some low volume candles pushing it out, and then it came back in with much more volume. So that would have been a trading opportunity here. And now the markets might come back again and trade down here. So yeah, those are great opportunities as well. And it is 158 ticks range. Yeah, would have been a nice trade opportunity. And now what does the market does? It has the candles which leads to the edge of the range was actually with not a lot of volume, as you can see here. And now by pushing in there, there's more volume coming in. So there's a lot of interest in trading inside that range here. Might well be that the market goes either down here or at least to the middle of the range, which would be around here already. There are a lot of movements happening now here. We are still within the initial range. This is from here until here, still bouncing up and down on the initial range. And yeah, the market does what the market does. As you can see here, the market again, the rate went to the top, to the middle, and then up there, and then straight to the range. So this one here is really an interesting to watch area. Now the market there's low volume here, which makes me suspicious if that market gets now distracted by that high volume and goes further down again and doesn't even go through it. But now there's more volume coming in. It is, yeah, the market is moving in, but not really. Yep, it is moving in and up. Okay. So now there might be trading opportunities because the market goes above and beyond that initial range. So we can wait and see if the market has some appetite to go even higher. I would only go higher when the market is kind of going confidently above that upper deviation of the VWAP. If it's just a little, let's say, let's glimp a little outside, because the volume here on the outside that definitely only have been stop losses, and now the market goes up there. So what is it doing? Looks like it wants to go back in again. Had a little peek out and said, oh, okay, no, too cold up here. I want to be up, down here. Depends now how much volume it actually goes in here. If it's like stays that low volume here, then I'm not very confident that it will stay in there. Now looking at the heat map of the data here, see that is actually just bouncing off this one here. Let me change a little bit the transparency here. Opacity is a little bit too high for my taste. So this is now the way out, which I would consider if that goes outside. No. Come on, my little friend here. Here now. Okay, better. Not as tight as before. Market is still struggling. It's like out in the cold, outside of its range, initial range here, and it goes back in. Okay, then this was just a fake out. This here would have been interesting to see. Oh, look here, look at that. Wow. Okay. Yep. Well, that would have been probably there were here, look at this one here. Probably there were a bunch of people hoping, speculating on the breakout, and then the market went what it always does. It always surprises people. Went in, triggered all those stop losses here, and now it's going back up. Probably now the market goes out of that range. Had enough power now. Bought a lot of cheap stuff. So let's see. Interesting, right? To see here, it's playing with the border of its own range, 128 ticks. I'm not a fan of trading inside that range here, so I rather wait coming out than coming back in again. Would be great to know that's if you look at this area here, just a little bit checking for myself. If you look at that area here from the low volume, and the low volume started here until it turned back in. Look at the demand index here. Low volume, demand index decrease, 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 because no real volume was actually being transported out there. And then eventually market returned. So I could have taken this one here and say, okay, guys, what about going short here? Would have been nice, 200 ticks. Anywho, market is feeling well around the puck, so let it do what it can do. So the market jumped now out of that range, and it's quite confidently. So I'm after the next little retracements, I'm willing to jump into that trade. Yeah, jump into a long. But I want to have a clear retracements, which tells me, okay, now you can go a little bit long. So here, that one was good. I'm waiting for a more like a low volume back, not so much. Okay. And yep, that's a nice retracement. And we have here, not to forget, we have quite some volume here. That is right above that range. So I want to wait until the market goes back down here. I will not enter that market before that. That's gonna be 100 ticks, not more. Good here. In case the market comes back now, but I hope the market gonna jump into that high volume area. That's coming from these two things. Yeah, so if the market goes back now with a nice candle, then I'm
Order
in
filled.
now. And the stop loss is right below the green area here, which got a lot of, gave the whole market a lot of boost here. So if I want to find the targets for my trade, that could be either right here or yep, right here. So I'll leave the 200 ticks and let's see if the long direction of the market still valid. The ES market is now at its all-time high as a critical thing. So if it breaks, that it comes with a bit of volume, that is good. I'm looking at the ES market here in parallel, but it's not a given. I might just jump out of the trade. I'm a little scared because the ES market is at its maximum. And it just, okay, it comes up there. That is very good. Does it go higher than that one here? And it had a new high volume here. That is awesome. That's very supportive of the whole move. Since we are in a vague kind of environment, I'm tending to go break even already. We are 30 ticks in the plus.
Order cancelled.
I'd rather go out when the market goes
Stop
back in
filled.
there. That was my intention, because the ES is not indeed having a lot of fun up there.
Order
Might have
filled.
not the wrong decision, but I'm gonna stay in the market now. Yeah. Yes, market moves out and moves up and moves up. That is awesome, and we like that. Oops. That's not what I want to see, right? Market goes back here. And if it goes back up, then I'm back in again. Yep. Don't want to add a second contract.
Order cancelled.
I want to limit my losses here. Market is kind of at the edge of my entry, and I don't like that.
Order
No,
cancelled.
I'm going out. That's not my market. That's just a rangy kind of thing, and here is a low volume area. So, but I should have stayed in my trade here. And then, so looking at the, no, I got a little nervous. I'm 125 ticks in the plus, and I don't want to risk it. It's so easy lost. And right up here, there's such a non-interest range here, area, which the market moved down from here heavily. Let's get that little friend here a little bit something to do. If we want to wait for a retracement, then we should be somewhere. Oops, no. That's not what we want to do. So we want to wait for a retracement, then it's this one here. And the market goes further up. Yeah, those are the moments when you think, oh, I should have stayed in. Naja. So this one here was the initial range from here to here, and then sub. Might well be that the market gonna test that initial range again back here. Might be, might not. Lots of volume being printed here. The green lines here, they are moving up. Volume is moving up. That's awesome. But it is a shaky environment. Now that's a rejection area from before. That is being touched here. That's low volume area, low interest. So it might well be that the market just goes back and not making the jump over it. But it does. Yeah, those are the moments as a trader when you say, okay, I've been in the market here and the market could be now with me here 100 ticks higher. So if you proved anything here with that market move is following the market, left the initial range here, faked out, came down here, grabbed all this the liquidity here, and then it went up here. Then it went out again with a lot of volume here, passing that area. And then the market turned back to this high volume area here from those two candles, these two high volume candles here. And then it turned out, and then it turned back here, and for it from the volume of these candles here. Now we had like this candle. If the market makes now another move to the outside, I'm in again. Like it touched that high volume area and then it touched the next one. But this one is not a real confident move up. No, that's not enough for me. It could well be a change in structure and it goes further down. Yeah, the indicator, the green lines are coming from. Now that's a nice move down here. Looking at a low volume here, that those are stop losses. Might be something here. There were limit orders holding the price and market sell orders were not able to push it down, but then they were able to push it down. Trading in that range here, probably interesting, but risky. I want to see a clear structure. Okay, I'm gonna go on mute again and let's see what the market brings. Switching on again now. Market is back at that. Oh yes, that's what I would have suspected a lot of stop losses down here. The market was catching them and now probably going higher. Market went back here to this area which I called out before, because there were like high volumes here involved. And yep, unlucky me, I'm kind of not brave enough or not experienced enough, I would say, to have jumped into that market right up here. I'm kind of undecided, and if I listen into myself, I see the VWAP deviation here that could break down here. I see this price action here up, and now it want to move up. That's a bullish signal. I see this one, a huge volume here. Up here could be a price blockade to go further. So now, so I see so many obstacles or different versions here and there. No, I would stay out of the market. And if the oh, that's now interesting here. That's now really interesting. So what I did before was I did the lower part of the initial range plus the absolute high here. And guess where the market went down? Up to its 50%. Isn't that just amazing how that's often works? Too often to be random. Oops, no. So, I mean, Fibonacci has lots of numbers, and just want to make sure here. Where is 50%? Is it here? Oops. See, it is there. And the market went down here and probably goes further up. And I'm too chicken to use that. If I would be in a trade now, I would get so nervous here. I would have entered here, and now the market goes against me, and then was it just going down, and then a little trend retracement, and then it goes back down here again. So even deeper than into the range. If I look at demand index, it would be on my side if I enter here. Yeah, but now it's inside. Yeah, it doesn't feel right. Okay, I might even be happy with my 125 takes of that market. Okay, it's micro, but I can easily, once I prove my consistency, then I can trade in NQ as well, or if I have more capital, I can increase the amount of lots I trade. So I just want to first be consistently profitable and then not increasing my risk. At the moment still, if I got a stop loss here, it's 2% of the available capital. which I would risk. Recommendation is 0 to 1%. So that wouldn't be a too great idea. So if there's any other trade, I'm gonna switch on the recording. If not, then not. So welcome back. Market did a move up, testing the new boundary here. Could be long, could be short. I'm more inclined to take it for short. It goes now into that candle where we had like this huge volume, and probably either to just catch the just do a fake out here or really settle up. There might be a little jump here now. Let's see on the volume line here how far it needs to push to get all these stop losses from these trades here. So really curious now. Somebody doesn't want them to go. I'm tempted to go in here with a buy stop order because it looks really like market wants to go up there. Max stop loss would be below here, 68 ticks. Do I want to take that? Yeah, too late now. Here, something was happening, but it's not sure now if the market goes further up. Now, not that decisive move. One of these moments as a trader when you think you have all the things together, like here, good example. So I identified here that candle, high volume, marked it with my, that's the market footprint indicator, marked it with my footprint indicator. Okay, and then here as well, there was a high volume area recognized. That's the value area high. That's the value area of the candle. And then it does its magic. And here it breaks, gets back. And then what speaks against just adding here some 75 ticks. Market comes back here to that area, even though if I don't want to go with the first entry, I could wait for the second one. Okay, then go a little up. Now the market does collect here, creates a new volume, which is actually a good sign because volume is moving up like from here to here to here to here to here. Okay, there are small corrections in between, and I would wonder if this one here, yeah, that was another of these um, high volume areas, which then were building the upper part of the initial range, and then market goes right back here, and as we have seen, it was like 50% as well of that area, and then the market goes up again. And looking here, I mean, I need to train myself more in being confident in the entries and accepting the risk. Like here, going in here after a delta shift, the risk would be here 62 ticks. I would put it underneath the high volume area. So yeah, need to train myself in that one, get more confidence. So welcome back. I will not do any trades anymore. I've got some kind of a latency issue here. 114 seconds is just not good enough for trading. Overall result of the day is, as you can see on the screen here, 125 ticks in the plus and 4 trades. Let's look back into the chart and mark those trades. And here they are. 2 of them are in the European session, where both of them could have been like tremendous winners. So here it was when the market bounced off the previous high, and then it just took too long for my little, that was a candle which was like 20 minutes long. So then I just closed the trade. Imagine that was running for more than 1,000 ticks. And then I saw it, then after I was pushing myself of not jumping into the markets, I saw a change in the market nature here, and then I went to a short here, but I went out of that short after 5 minutes again. Should have at least taken it until here with 222 ticks, or here 500 ticks. So those were 2 great opportunities. One was definitely with the market, the other one was against the market. But nevertheless, that proves that the way I enter trades is not too bad. There were 2 more trades, one with 1 tick, the other one with 0 ticks. The entry was okay. Closing them too early. I could have taken a little bit more ticks here, but nevertheless, I protected my capital, and that was the main goal after the learnings from my trading day yesterday. That was the main goal. Yesterday I made over 400 ticks. 401 ticks in 49 trades, and today I made 125 ticks in 4 trades. So I'm happy with the result. I'm happy with the weekly result. I did in that week about 1,000 ticks, and I'm happy with the result. So I'm gonna go into the weekend and wish you everybody a wonderful Friday evening, and see you then, and see you down at the trading floor.